Well, how about that? Not a bad day in the stock market. Couple more wins blasting off. Shared over at the Discord. Come on over and join the celebration. Links in the description. Trades over there, technicals over there, analysis over there. If you saw my morning video about gold, will it break through resistance? Well, I gave some evidence for that, a case for that. I also talked about Bitcoin, and I talked about Dollar Tree and what I was looking for. Dollar Tree added to the trade wins, if you will, yesterday, 20% profit, and then today, 11-ish, I think 11.7% profit on that one. So while that doesn't sound huge, those are intraday numbers. And then also for the 0 DTEs that I'm keeping my skills sharp for this summer when I'm off work, do some live day trading as well to show that. So I have 9%, 37.5%, and then 30%, 3 for 3. On the day trades as well, using the bread recipe trading strategy. You guys can learn how to do that like I do it by using the link down in the description for the coursework that you'll find through Stockmo Academy. The technical analysis course has the bread recipe in it. And if you want to learn how to use options the way that I do, there's a course for that as well. Use code word doctor when you sign up. Guys, I'm going to show you the technicals. I'm going to show you what I'm looking at. I'll show you how well they are showing up and the way that the charts react around those technical values in this video. So like I said, I mentioned gold, mentioned Bitcoin, mentioned Dollar Tree. I'm also going to talk about the Qs. I'm going to talk about the SPY, IWM, you name it. We're going to toss the end of this video. Also, where exactly could we go from here, given the news that we have that there could be some sort of agreement reached sometime between China and the US in the near future? How near? Well, like I said, we're going to look and see for some potential catalysts coming up our way, especially next week, I believe, is going to be a huge week for us aside from that tariff news that we have. So without further ado, ladies and gentlemen, let's toss up here for you. Let's go to the Qs. We'll build up to everything. So let me go out to the daily chart on it. There we are. And we'll move over to today. Talking about, you can see this circle that I have on here for the EMAs, the 5 and the 13. We actually closed up above the 5-period EMA. Not so bad. The RSI climbing, but still down below 50 for the moment. That's also something that's most definitely worth noting because right now, still bearish momentum. You can see this trend line that we have coming down through here as well. That's another thing that we want to be concerned with because we have the 5, then the yellow 13 is just up above that, and then that trend line resistance that we need to use to break up above that as well. And that also goes along with a little bit of choppiness that we have in terms of historic resistance as well. So we want to see the RSI climb up above 50. We want to see the candles move up above the 5 and the 13. We want to start riding on top of those moving averages to see that bullish evidence. You can see here how the candles are dangling off the moving averages right here. And let me, for some reason, VWAP's on. There we go. Turn that thing off. You can see here during this uptrend how the candles right on top of the 5. So where are we at right now? Well, as of right now, we're sort of dangling off the 5, but today crossing up above it. We could be seeing that moment if the good news keeps on coming our way. So in terms of the Qs, just to summarize, not quite bullish yet, but maybe, just maybe we're getting there. But that good news does need to keep rolling. Like I said, I'll give that overall take, the overall impression throughout this video. Let's move over to the SPY. And when we see the S&P 500 ETF going on right here, we're down below the 20-period moving average. We're also having RSI down below 50, so still bearish. We do have a bit of a trend line, even though I don't have it currently visible for you. Let me just slap a new one on here for the moment. There we go. I like that. And it looks like for the S&P, there we go. That's a much better view. That's the trend line that we want to get over. We want to see the RSI keep climbing. Right now, just not quite there yet, at least on the daily chart. I will say on the monthly chart, where you find ourselves at 52.35, not so bad. Also, this 20-month that we have right now, as we close down by 5 cents below it. And then we have all the way up until we get up to 529.66. So we're just barely shy of that 20-month moving average. We could see that recovery from here. Like I said, we want the good news to keep rolling in. For IWM, I said that it comes to life below the green line, and so far that's what we've seen. This is the daily chart. 1, 2, 3, 4 days down below the green line, close below it again. A 5th day back up above it, and then close down below it again. But you can see that fight happening right around the green line, and that comes from this bull channel that we've been rocking in for a while now, going all the way back to 2009, and really being established, this top trend line having its third touch all the way in September of 2022, August of 2022. So this is what we're looking for. IWM, the Russell 2000s ETF, tends to die above this line, comes to life below the green line, lives in between the white and yellow especially. So for me, I started dollar cost averaging down below that green. It's worked out pretty well so far. I think I'm up 5-ish% or so on that position right now. So getting into Bitcoin, what am I so excited about? Well, check this out. I talked about this in my previous videos about that resistance being at 91,895. We got darn close to that. We were at 91,761. So very, very close, within a $100 or so, $130 or so from that peak before resisting a little bit. Volumes are looking great so far. It's potentially with that growing volume that we have more of a move, a bigger move coming. And if we can make it above the 91,895, just call it 92,000. If we could break up above that, sit on top of it as support, that could give us room up to that 98.4 that we have up here. That's also a big line to cross. If we can get above that, then it's 106, 107 that we failed to sit on top of. You can see just how huge that resistance is right up here. As a matter of fact, huge enough resistance that I'm going to toss up here a red rectangle for us. There we go. And that's what we want to watch out for that resistance continuing for Bitcoin, for BTC, that should we make it back up that far. So what are we seeing right now that contributes to Bitcoin, and what could we potentially have going forward from here? Well, I think for Bitcoin, something that's been in our favor for Bitcoin is some of the doubt for the US dollar, if you will, and also long-term treasuries not seeing that love because of the doubt for the US dollar. And then we saw that rush to gold. Well, then gold started getting really toppy, really peaky. I'll share that chart with you like I did this morning as well. And so I think we see some of that adoption coming for Bitcoin that furthers that strength for the Bitcoin prices. It's nice to see those growing volumes with it as well. Likely a tailwind to have the rest of the stock market actually going up with it as well. So for Bitcoin, I think long term, we have a much higher high than what we see right now. In the near term, we're probably still in that area of chop unless we can sit up above that 107,000 mark. We actually have to sit on that for support. It has not happened in history for Bitcoin. So keep that in mind. Let's move back into the charts here because I want to talk about the gold chart. I said in my morning video that we would likely retrace down away from that top line, which it goes from 34.71 to 34.84. And we did close. We were actually up near it when I started recording my video, 34.73, went down to 33.79. And the reason that I bring that up is just to keep reaffirming that the technicals that I have here for you really can be relied on very often, a lot of the time, for where you're going to find those supports and resistances. And then you guys can use that to help inform your trades accordingly based on what you've done. For me, talking about Dollar Tree, I've mentioned this before. There we go. So a Dollar Tree, I said that there was a gap to fill over here, and you'll see the label now says gap filled. As a matter of fact, we still have a gap over here that goes from about 88, 89, all the way up to $94.20. We did not fill that yet. The momentum on the daily chart is bullish. On a weekly chart, bullish. On the monthly chart, if I can click on the right one here, we have increased in volumes. We have long bottom wicks. We have this big top candle. I think that we do continue to have a bigger move coming. And I really think that Dollar Tree benefits in two ways, in two big ways right now. One, if the market moves up, then Dollar Tree tends to move up with it. So rising tide lifts all ships, or however the saying goes. I think the other benefit that it has is that if we end up in a recessionary environment, Dollar Tree could see a little bit more love in its stores. So I think that we are seeing a temporary bottom right around that $62 and a lot of buying pressure coming in, pushing this back up. And I do think that we will see that $94 price tag coming. Why do I keep on cashing in on my options though for 20% and 11 point something percent, almost 12% today? Why don't I sweat the overnight risk? Well, honestly, with the market being as choppy as it is, if I can take that money and go bird in hand, that's something that I'm probably going to do. There's still a lot of movements out there. There's still a lot of risk that we have. I've done a lot of intraday trades recently just because I never know what I'm going to wake up to. And with options, even I can't do post-market. I can't do pre-market trades. I can only do regular hours trading. And so because that's mostly what I use for the alpha in my portfolio, I tend to kind of stick and move, if you will. I try to be nimble with those trades that I have. And like I said, if it's already profitable enough going into close, that's something I also take advantage of. So for Dollar Tree, I do think there's more upside coming. Also, the other reason that I didn't want to take the overnight risk is also the theta decay, the time value loss of those options because it was a near-term option. So let me put this back up here for you, and we'll talk about what I think could be coming for us in the very near future. So first of all, I do want to stop by Tesla because even though they didn't report earnings yet, we still have a little bit of information. And last I looked, we had a wild consolidation pattern happening in the after hours with those numbers. And we still man, the market just can't decide what to do with Tesla. So this video isn't about Tesla, but I did want to stop by and I looked at their investor deck. I looked at what they had to say in their press release, and honestly, it is pretty mixed for what you have. It's like, well, we got a lot of good stuff going on, but we also have some concerns happening. So I think the market's really waiting for that commentary. And at this point in time, it's still a bit of a coin toss. So something that I did for this one, because of the macro environment, I decided to do a Hail Mary with a very, very small option play on TSLL, which is double leverage, put out a short-term put that if it does sell to the downside, that's a nice hedge for me to scoop up more Tesla shares, do a little bit more dollar cost averaging. I think that potentially with automotive being a high part, still a massive part of the revenue, that could be something that might suffer some near-term pain, especially if we see a further increase in days of inventory, especially given their lower production numbers that they have throughout this quarter, which, by the way, were expected, already priced in. It's nothing that wasn't already announced or known. It was because of the upgrades to the line for their new Model Y rollout. So what do we have coming up for us in the market? Well, let me toss this up here. There's a little bit of what we got going on. Besant says he expects de-escalation U.S.-China tariff fight in the very near future. We know when this came out. So this headline is about as much as you need to know for why the market moved up as quickly as it did today. Now, mind you, very near future doesn't necessarily mean days. It doesn't mean minutes or hours. It's still something that's indeterminate or indefinite until we actually have something big happen. And that can happen big to the bullish side of things, and that can also happen big in ways that could be very bearish for us. But also, there's something I want to bring this in, and this is really going to bring it full circle. So this is the Atlanta Fed GDP now, and you can see the estimate right now is down in negative. When you do gold-adjusted GDP now, it's still negative, just barely down below zero. Blue chip estimate that we have here, blue chip consensus, still positive, but barely. So what does all this have to do with anything? Well, if we go down to the calendar, the release dates that we have, scrolling, let me check out. There we go, 4:30. That's what we want, because this 4:30 is what we have for the release date of Q1 GDP, and it's also the initial date, the initial nowcast date for Q2 GDP. So why would Besant come out and say that it could be a deal between the US and China in the very near future? Honestly, April 30th, I think, is that catalyst date, Q1 GDP, and then also Q2 from the Atlanta Fed nowcast. So imagine Q1 GDP comes out negative, hopefully not, but imagine that it does for the advanced estimate on April the 30th. And then imagine that the Atlanta Fed at GDP now also shows negative for its initial read. The headlines would go absolutely bonkers on that day about further evidence of being in recession that could potentially cause the market to tank, to draw down. Plus, we have labor market news next week at a time when we have the U.S. 10-year Treasury yield up above 4%, in the mid-4s, if you will, closing on that 5%. Kind of hesitating today with the headlines that we have. We even saw TLT, which is the 20-year Treasury or the triple leverage version of it, giving back a little bit with those ETFs as well. The prices rebounding a little bit with the news that we got, and that happened around 11:59 a.m. Eastern time today. So we could see that deal take place. Hopefully that deal does, because hopefully it's also something that allows us to have something to refute the idea of recession should it come to that on April the 30th, when those numbers come out, not only from the advanced estimate, but once again from the Atlanta Fed GDP now. Those should both definitely be looked at right around the 8:30 hour or whatever time it is that Atlanta Fed does their actual update for the second quarter advanced numbers, if you will, or I should say the Atlanta Fed GDP forecast that they give for Q2. And remember, it's just the advanced estimate for Q1. Hopefully the revisions that come along for Q1 take us to the upside a little bit, because it would be nice to see them come out and be a bit more positive. So the market from here, probably not out of the woods yet, probably still going to be a little bit rocky. We do want to watch the GDP numbers as they come out, because if they come out low but positive, no recession. We do want to see the higher the better, of course. We also want to see those labor market numbers come out. We want to see them be stable as they come out. So we get JOLTS coming out next week. We also have non-farm payrolls, and we also have the unemployment rate. Non-farm payrolls and the unemployment rate are both on Friday. May 2nd. I believe that Tuesday, April 29th is when we get those JOLTS numbers. So we would be watchful for each of those labor market numbers as they come out, because all of them could work together to form a narrative. And we certainly want a narrative that's a positive one that pushes the market upward. So the market could be preparing for a recovery. I'm hoping that it is. Corporate earnings are also something to keep an eye on between now and then, because they are also going to be that catalyst. So we want to watch for their forward guidance and what they give. Tesla is one of the big ones today. We also have Google, Microsoft, Meta, Amazon, Apple, you name it. We also want to see further relief coming for them, and we would like to see positive guidance coming out their way. Guys, if you want to see more of my technicals, if you want to see more of my analyses, if you want to talk with me and the other panel experts as we have a joint Discord together, that link is down in the description. You can see the trades that I'm doing. You can see the trade wins that are put out there by me and the other members, the other panel experts as well. You get the bread bot, the AI tools. You get the advanced charting tools. There's crypto, there's options, there's stock, just general stock talk, if you will. Just everybody supporting each other to work towards financial freedom. It is the best community that I've ever been a part of, and the products and services are just seemingly endless over there. They can spend all day and still find something new, interesting, exciting, really helping you chase that alpha, really helping you to push towards financial freedom. Guys, links in the description. Make sure you sign up for the earner tier so you get unrestricted access to everything that the Discord has to offer. And then don't forget about that coursework. If you want to learn about technicals, learn how to trade like I do using the bread recipe, that's the technical analysis course. There's an options course as well, which is what I use once again to build that alpha in my portfolio. Those coursework through Stockmo Academy, links in the description for that as well. Bundling the courses saves you a ton. And then also code word DOCTOR when you sign up for those courses, DOCTOR, that's going to save you a ton more. Guys, let me know what you think of the commentary down in the description of this video. Otherwise, I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you next video.